Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Tuesday, February 22nd, 1:55 p.m. New York time. Here we go. This is going to be a beginner's guide. Swing trading. What is swing trading? Swing trading is when you're in a position for 2 days or longer. And this video is going to include using options with swing trading and those options and that trading strategy to earn income weekly. The underlying I'm going to discuss is the S&P 500, and I'll go into explain a little bit more about that. So the Standard & Poor's 500, or simply the S&P 500, is a stock market index tracking the performance of 500 largest companies listed in the United States Stock Exchange, the United States Stock Exchange. That stock symbol is SPX, Sierra Papa X-ray. It's here on the top left. Got it? If you have something different, well, that's maybe with your broker, but the exchange listed as SPX. Then there's another S&P 500 product. It's the S&P 500 futures, which trades on the CME, aka the Chicago Mercantile Exchange. That's here on the left. So now a little bit about each one. The S&P 500 cash index, that trades Monday through Friday, 9:30 a.m. to 4 p.m. New York time. Where the S&P 500 futures trades from Sunday to Friday from 6 p.m. to 5 p.m. Yeah, nearly 24 hours. Closes Friday at 5 p.m. and opens back up on Sunday, 6 p.m. New York time. Unless there's holidays, they're different. The other difference they are not just the difference in exchanges. The exchanges is not a stockbroker. The exchanges are where products choose to be listed on. The exchanges charge fees to be on those exchanges. And then brokers apply to be able to get access to those products in those exchanges, and they are incurring fees that get passed over to the customers. So these different financial products, which both represent the S&P 500, and they're on different exchanges, different hours, different fees, different margin requirements, different structure. Hopefully you got that so far. If you don't have access to both, well, that's your broker you selected. Another thing is they both have options that trade on them. If you don't have access to those options, then it's a problem with your broker. Looking at the products now, SPX, S&P 500. And we're going to look at the ES. So here on the left, the SPX cash index, S&P 500. When I say cash index, you know I'm talking about the S&P 500 cash. I'm talking about the futures, I'm talking about /ES. Understand, the futures, see the price? See the price? There's a slight difference. Let's just look at it. 42, the first four numbers, 42.76, 42.72. It's flipping anyway. It's about 4 or 5 points different. Yeah, there is a difference. Got it? And then you're looking here at the bid and the ask. Bid and the ask. So they're different. Why are they different? Yeah, there's leverage and some other calculations that make them different. Okay. Show you something up here now. the S&P 500 right here, futures, again, /ES. Understand the futures are contracts, they're derivatives. They have expiration periods like insurance. Insurance expires. So these future contracts for the S&P 500, which are different futures than the other financial products. Yeah, there are different financial future products, but we're talking about the S&P 500 futures. They expire quarterly, March, June, September, and December. Yeah, if you don't stay in it, shame on you. Sorry, if you do stay in it when it expires, shame on you. First, the S&P 500 cash index is not a contract continuously. Yep. So when you're trading the futures, that's another thing to be aware of. And most people choose to be in the futures contract. That's the most current, that has the most liquidity. Okay. Now let's go back to the cash index. Looking at the options here on the S&P 500 cash index. Sure, you see some of them here in the white, the yellow. Those are weeklies. They expire typically on a Friday. They're continuous rolling. There's one Friday, another Friday, got it? Where you have the monthlies that typically expire the third Friday of every month. And then you have other ones that are the quarterlies. And then you have other ones that go further out into longer durations. When we put up the ES here, look at the options on the ES also. Yep. Same thing, different durations. So the point is you need to be aware of that. What's the benefit of trading one over the other? The hours that they can be traded. Again, the S&P 500 is only available to be traded. The options on the S&P 500 only available to be traded at the same time as the stock index, 9:30 a.m. to 4 p.m. And actually, the options continue trading for 15 minutes after 4 because it's an index and needs time to calculate all the stocks in it. So again, the S&P 500, same with the NASDAQ 100 and the Dow Jones. They options actually trade till 4:15. Yep, so you can actually get in and out of them still up to approximately 4:15. Where the S&P 500 futures and the options on the S&P 500 futures, they trade the same as the underlying contract. So again, I mentioned the S&P 500 futures trade from 6 p.m. to 5 p.m. or you could trade the options the same as well as Sunday. So the point is, whatever is more convenient for you, if you're in a different time zone or a different work schedule and you don't have access to, say, the S&P 500 that benefits you, you could trade the S&P 500 futures. Yeah. And then the margin requirements also are regulated at the exchanges. But again, the individual brokers have their own policies, what they put them at. Let's go here, the chart. We're looking here at the monthly time frame. Each candlestick here is a month. And we're currently in the month of February, so it's not done yet. Just understand when I'm looking at them, they look very similar. Again, but the prices are a little bit different. Let's go into the weekly time frame, each one being a week. There we go, each one being a week. And they still look very similar. Let's go into the daily time frame. There we go, each one's daily, very similar. Again, S&P 500 on the left has less hours of trades, less price activity, where the S&P 500 futures has more hours of trades. So you start seeing some difference. Now we're going to go intraday. We're first going to go intraday on the SPX cash index. I'm using the 30 minutes on the SPX for the purpose of it trades from 9:30 to 4 p.m. the cash index. But again, I mentioned the options trade for about 4 to 4:15. So because there's that half an hour period from 9:30 to 4 p.m., that's when I'm showing you the 30-minute bars on the SPX, where the futures And when I say futures here, I'm just referring to the S&P 500 futures. It trades, again, I mentioned, from 6 p.m. to 5 p.m. So those even hours. So I'm going to put this on the hourly, each one being hourly, or if you want to call it 60 minutes, call it the 1 hour or the 60 minutes. So we're looking here at 5 days on the left, 5 days on the right. So there's more trading time on the futures, obviously, because it has more hours. So when we zoom in, I'm going to zoom in starting from last Friday. Yep, here's last Friday here. So you can see a big difference in the amount of trading hours. Now, when you start looking at it here, I'm going to zoom in some more. Let's go in some more. Again, I know it's different, 30 minutes, 1 hour. So here, here. Now we're going to go evenly. What does that mean? 15 minutes. Each one's going to be 15 minutes. That's where you're going to start seeing some difference. Each candle's 15 minutes. We're going to zoom in from, let's go from Sunday. Remember, there's no futures here on Sunday on the cash, where the ES does have futures trading. Let's just leave it from last Friday. There it is, last Friday and last Friday. That being said, now on the left, sorry, on the right, show you what's called the extended hours. You see this gray area? This is outside the normal trading hours. Still trades. It's just the primary hours you expect from the right there, the dark area, and the extended hours. This does not occur here on the left on the S&P 500. So again, from these extended hours, the futures, you could be doing trading. If you want to get in before the stock market opens, which opens at 9:30 a.m., you could be doing your trades at 7 a.m., 7:30, all the way continuously till 5 p.m. That's a great opportunity. Plus, you can scalp them and day trade them. The strategy here is, let's put this on the higher time frame. And I'm going to show you on the S&P 500, but you can do the same on the ES. Look at the current candle for the month. It's a yellow candle. That means inside candle. It means they didn't take out the high or low of the prior candle. Got it? Again, the monthly's not done yet. Again, but we haven't broken above or below. Go down to the weekly. Yep. So the current week, already higher, lower high, lower low, trending down. Trending down. Little drawings I create, show you what I'm seeing. Yeah. Past several weeks, the trend down, declining. When we look at the monthly again, you see monthly, yeah, we made a lower high, but we didn't take out that low yet of the prior month. So let's put this back on the weekly. The weekly, we haven't taken out the low of the year yet. Here's the low for the year. Here's the high for the year. Let's go into the daily time frame now on the, again, S&P 500 cash index. Here's the low for the year right here. And here's the high for the year. So for the day, today we're red. We're already trading lower low than last week, trending down. Things don't continuously go down. Things don't continuously go up. There's reversals. Yep. So if you think we're near the bottom for the week, there's a strategy you could do for the options down here. And that strategy I'm going to show you is called vertical spreads. Vertical spreads and credit vertical spreads specifically. There's debit and credit vertical spreads. So there are different kind of vertical spreads. The ones I'm going to discuss are credit vertical spreads to earn income. So if you think we're near the bottom here for the week, you could do a strategy again. Credit spreads and earn income. I certainly will not be doing that here if I'm bearish. It should have been done up here if I was bearish. If I'm bullish, it shouldn't have been done up here. Why would I not want to do up here if I'm bullish? Well, if I've done it up here when it was here, if I'm wrong, I'm going to get hurt real fast and maybe don't have the opportunity to still come out as profitable. Versus if I was bearish up here and I put the strategy up, I had a higher chance of opportunity to have the income and have the trade work out for me. Going here on the S&P 500. Let's put this on the 5-minute, just to show you something again. Put this on the 15-minute. This is overnight. There's the Asian session. That's from 2000 to 2300. There's the London session from 0200 to 0500. And then the New York session starts at 8 a.m. And then the cash at 9:30. So you see different activity did cause a lot of price action. So again, the point is, if you're not having the opportunity to trade during the New York session, there's still trade activity overnight to take trades for scalps or swing trades. And that's what I'm about to show you using options so you can earn income. And that's going to be on part two for those that are my Patreon members, level 2 or higher.